The IMF has raised India's GDP growth outlook for the financial year ending March 2025, that is FY25, to 7%, and this is up 20 basis points from the previous estimate in April. For the following year, that is FY26, the growth forecast for India remains steady at 6.5%. So what is driving this optimism? Well, according to IMF, it is because of an upward revision in the FY24 growth numbers as well as better prospects for private consumption, especially in rural areas of India. Now, let's also zoom out and look at the global picture, where IMF projects a growth of 3.2% this year and a slightly higher 3.3% next year, same as its April forecast. The advanced economies' growth prospects were left unchanged at 1.7% for this year and 1.8% for the next year. For emerging market and developing economies, however, like those in Asia, growth is looking stronger, with projections at 4.3% for both this year and the next year. But there is a cautionary note. Growth in these regions is expected to slow down to 3.3% by 2029, that is the medium term, because of factors like the aging population and slower productivity growth. Now, on the inflation front, global inflation is expected to continue to decline, but in advanced economies, the disinflation might slow down this year and the next, thanks to a more persistent inflation in service prices and higher commodity prices as well. Emerging markets are going to see inflation dropping more slowly compared to the advanced economies. But the good news is that inflation levels are already nearing the pre-pandemic levels for many of these economies. So what are the risks to this outlook? Well, the IMF points out that there are several near-term risks like inflation pressures, that is from trade tensions and geopolitical tensions. There's also the risk of higher for longer interest rates, which can affect global growth. Lastly, the IMF emphasizes the need for policymakers to restore price stability and address the legacies of the recent crises. The IMF says that in countries where there is upside risk to inflation, that is where inflation could go up, central banks might need to hold off on easing policy rates too early and be ready for further tightening also, that is for raising rates if at all needed. And wherever inflation data is more encouraging, that is where price rise is slowing down, IMF said that monetary policy easing should proceed very gradually. The IMF has also urged policymakers to act now to revitalize the declining medium-term growth prospects, but also warned that any misuse of inward or domestically oriented policies can compromise the ability to tackle bigger global challenges.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.